Hello, everyone. Welcome to today's session. Let's get underway. Long-term market perspective here. We've moved back to mildly bullish here in this bull market, and we've got a little bit of rallies working today. Let's take a look at those charts here. But we're looking at momentum, which has been working its way back down a little bit here with the last few days, the upper end of this range, and we're seeing breadth, which is holding steady right here at this current momentum location and weakening just a little bit here. And then also sentiment is still quite positive. So we've seen two of the indicators, breadth and momentum, pull back into a sustainable location inside of that buy zone from the extreme range. Let's take a quick look at buy-sell ratio and S&P 500 here. We've seen buy-sell ratio tick back to 0.94. Yesterday was, or 0.94. The day before that was 0.88. So relatively flat right here. You can see we've just been this for the most of this rally almost all year long now. This has been our mess right here. And it's just gradually been slightly bullish. There's been this bullish and then some bullishness here, a little bearishness early on back in January and February, but nothing extreme. We just haven't seen those real wide extremes yet. And whether or not we're going to see those or not is yet to be determined. But if we were to see a market top right here and some continued selling, we'll probably see that red line and continue to move higher, and that green line continue to move back. Or when we get another push higher in this bull market, it's been a good one as far as the length of time and really the magnitude that we've been seeing on this uptrend. We're seeing sentiment in that upper range. It's been in this upper range as well, upper range versus the lower range. You can see this 50% line right here. Just draw that across the top. Kind of the same thing here. This is an uptrend, this is a downtrend, and so when we're in this upper range, we still have that bullish bias, still that pullback by the dip scenario where it can pull back in, we can get some support, and ultimately markets have been moving higher. That trade is still intact. That perspective is still intact until it starts to break down, which it just hasn't done yet. What I mean by that, let's look at the S&P 500, is this support area, and I talked about this yesterday as well, that this support area needed to hold up. It was starting to bounce there, and so far today it's still up in this upper range. If we can break out of that 524 on SPY, then that 524 creates a new floor, creates a new support area. Whereas now we've got this 515 range which needed to hold up. This was an area of support. It needed to bounce off that in order for it to continue this uptrend. If it hadn't done that, and if we had broken down below these levels, now it creates that new resistance area. We haven't seen that in this uptrend yet. We haven't seen a situation where we have a breakdown of the trend and it doesn't retest it and rally. Okay, retest it and rally, retest it and rally, breaks down, it retests it and it rallies. Okay, that idea of I mentioned it before, where it's just, kind of that ladder, kind of that stair step where it runs up to an area, retraces, maybe it pulls back, and then it works its way up, and then it breaks through that, and then it retests it. So that area where it was resistance now becomes support. And that's been that's really the definition of an uptrend. And so we haven't seen a break of that yet. Now you're seeing here as well, it's just kind of flat. So we'll see if we rally and break out and just keep doing that. At some point, we're going to break down through one of these levels. And when that starts to happen, that's the one that we want to be watching for, because then we want to watch to see if it breaks down this area and it falls to say 506 and then it retests back up and hits that 515. It's going to be resistance now. Okay, it's going to act like resistance and could push things back down. So we haven't seen that yet. I just want that move to be aware, for you to be aware of what you're looking for kind of a shift in bias, a shift in perspective. It's still, granted, we're just extremely overbought in terms of some of the other indicators, but we haven't seen a trend shift yet in S&P 500. Quickly, just reiterating some of the macro perspectives, we're seeing bonds in this you know, when you see a trend, this is a great downtrend example. It's shifted back to this downside. It could be running into some support though around that 50% 618 support range. So we'll see if bonds can, if that was a deep enough retracement to finalize the selling and then get some new demand starting to come back into the market. As of right now, some work to do, some significant work to do for bonds, which means that interest rates also have some work to do to start to drop, because if bonds are dropping, interest rates are going back higher. And we're seeing that both on TLT and SHY, which are the long and the short-term bonds. And again, whether or not that turns into anything, we shall see. But those are the talking points. We're still dealing with the high interest rates. We're still dealing with inflation, and equities are just cruising along and not really paying much attention to it, or they're believing that they've already priced in all of the different perspectives of interest rates and inflation, and the market's good with it. The market's fine with whatever it is forecasting and seeing. It's when we start to get some more data points that maybe are negative or outside of what the market is expecting that we may see that catalyst for downside. As of now, things are just moving higher. We did see a little bit of a breakup here in some of these sector ETFs versus, you know, everything going from all green like it was last week to now we're getting a lot of these in short-term downs and also getting some shifting over to holds. And then we've also got some that are full on downtrend. So this is a good example of what that mildly bullish and mildly bearish alerts start to give you on that direction alerts, because this is starting to create some pause. Okay, what we don't want to have happen is all of these sectors start to look like this real estate sector where it's breaking down, continually breaking down, and showing some weakness. That's going to happen eventually, but as of right now, we don't have all of the sectors participating in an uptrend, and that's creating a little bit of the slowness that we're seeing in the market right here, of really just not a lot of buying or selling at this point. And then commodities, if we jump over and look at really the two commodities that have been moving, oil, which is still in that nice uptrend, and gold, which has also been in a really nice uptrend. We've also seen silver have a big pop right here, and having a nice move breakout again for whatever that means in terms of asset classes that are going to participate, or stocks that are going to participate to that upside. We are seeing a move though in those commodities. Also seeing steel find some support and moving higher. So all of those different levels and commodity prices moving higher could be an indication of a new bull market really across the board in commodities. So we're watching and keeping an eye on some of those trends as they're happening. Now, one of the processes that will evolve naturally with this TradersPro method is when you have stocks that are continually working their way into new buys. Okay? You're getting stocks, you're getting trends that are starting to either revitalize themselves or disappear. So a new trend may be disappearing, where an older trend's disappearing and a new trend is starting. For example, Toll Brothers, home builders. This one really hasn't had much of a move. Actually, let me move to this other one, this REAX. So REAX had a big move here. In fact, this was one we traded in the muscle wheel portfolio. We got stopped out of it and reverse, and it comes back to play again and say, hey, here we go. This didn't work. We got stopped out of it. If it were to have continued to drop, right, then we're out of the trade. But there are times where this happens and then it comes back in, and it's a new opportunity. It's a whole new trade. It's a whole new setup. And so if you're having scenarios where you're being stopped out of some trades, they may show back up again. Pardon me, they may show back up again here, and this is a good example of that. So keep your eye on that new buy list, and remember that the new buy list is pulling stocks that have gone from a hold to a buy in the last day. It's not looking for stocks that have gone from a sell to a hold to a buy, although sometimes those show up. It's looking for anything that has had a retracement. It's gone from hold, and then you're getting that first buy signal back in again. and it's a real estate stock. Oh my gosh. We've seen that in gold stocks. We've seen that in oil stocks. We've seen some of those now that are starting to really get a nice move here. HMY, they started back here. So we actually were able to get into HMY back here, which is, again, it's a gold-based material stock. And we've got a pretty nice gains on those so far. That's what new trends are going to start to feel like. And so as we're adding into those, it may be, well, in fact, let's look at it, because you're seeing kind of this shift in leadership just a little bit in the portfolio that we've got currently. Here's HMY, we're up 30% on that. USAP, which has been another basic material, it's a steel producer stock. This was the entry back here. And again, this was in the new buy daily portfolio. It met all the criteria, new buy confirmation here, had some volatility, but it's still continuing to work now. And it's a steel stock. Okay, so we're naturally getting into some of those new trends as they are emerging, just based on the new buy setup as well. Watching that each day, we had Harmony Gold, USAP. We also had another gold stock, KGC, which is up 20%. We bought that one right here. It was either here or here. Had some volatility, but it's continuing to work. Those are gold stocks. So we've gone, in the last 6 months, we've gone from really kind of tech to crypto miners to biotech that have performed really well, and now we're seeing basic material that are starting to perform, and we're getting more and more of those holdings that are coming in. Now we've also got some others as well. CDXC, some of these have been still continuing to trade with biotech. This is a little bit more aggressive trade. Okay, now, and I'll show you one of the ways to find those. And I like to trade these because they're relatively new. Once you start to get you get a stock that is relatively flat, and then it pops, and then you get massive volume starting, and it's a relatively low price stock. They can create some momentum. You can get some additional follow through, and it may be relatively early in this overall trend. And they're volatile, but they can, when they move, and those are fun ones to include, because they can double and triple, and maybe even more so. That's the kind of trades that we want to be able to also participate in. We don't want to just try and buy Costco and Walmart and Home Depot, and although we can certainly do that, because those have also been moving quite nicely as well. In fact, let's take a look and see what's a name like that. Let's say that if all I'm doing is focusing on names of stocks of companies that I know, I can still use the same process and say, oh, okay, Costco did have a nice uptrend, probably some kind of earnings or some kind of slowdown, and now it's in this downtrend. It's in a long-term uptrend, but now it's pausing. Do I want to buy it right here? Probably not. At least based on the momentum strategy, I want to wait for it to happen, for that to give me confirmation. It may never do that. Okay, it may bounce and rally, and then Costco could be in a new downtrend until it rallies, reverses, and then gives us new confirmation. I can easily say I don't want to trade Costco right now. Why? Because it's not moving up anymore. Now it's giving me that pullback, that trend, that uptrend could be starting to falter. Okay, so that's Costco. Let's look at, maybe say Walmart. If I were just to look at Walmart, same story here. So we've got Walmart, not quite as bad. Walmart is pulling back inside of that momentum zone. This is one that you can see now. We talk about this when it starts to kind of give us this color change, and you get that hold bar that gets stuck right in the middle. That's typically when we're retracing back towards that 236 Fibonacci level. Notice this says 23.6. When I say 236, or the 23.6, or the 236, I'm talking about this 23.6% Fibonacci retracement. It's this line and this line. The tool to enable the tool on the software is this one right here. And this is a critical level that we're wanting to maintain in a momentum trade. In a momentum trade, we want it to keep moving higher, just like this. Okay, these maintain momentum. At some point, that momentum starts to break down just a little bit, but we can give all the way back to this level for it to, prove itself. It's like, all right, if it's going to go, it's got to get going right here. We know that. If it doesn't, then it starts to break down, starts to just kind of, bounce around right here, and ultimately it weakens and ultimately does not finish out that overall trend. I was going to pull in a couple of examples. I may do that next week, but or find some other examples here. So as we're now going through this process, so let's take a look and say, all right, muscle stocks group. I like to go through this each morning because there are some times where muscle stocks do not even get a hold signal. Okay, this stock ROT, these are stocks that sometimes are hard to trade because we don't trust them, right? We are like, good grief, and if I would have been all the way back here on this stock and I would have seen a day like this, and it's massive volume and it's a huge gap, and say it's gone from 8 to 13 and it's had a big gap and it had some run after that, that was probably, a huge move. This is going to say 35 or 45%. A lot of times we're like, oh boy, that thing's coming back down. That thing's going to sell back off. And it had a gap. So I don't want to buy into that kind of a stock because it could fill the gap and there's too much risk involved in that. And then in this case, that is the scenario where if I were to set up a new buy on it, I'd have to buy it here. I could set a stop right here. So I can still participate in some of these stocks, even though they have these big moves. And then the next day, okay, the very next day, it rocketed again, and then it rocketed a third day, and then it rocketed a fourth day, and then it rocketed a fifth day. It went from 8 to 40, in 5 straight days. Those are sometimes they're tough to catch. They're even harder to trade and hold on to some of those. But in this case, you'll see that you get opportunities like right here, a bounce back to the 236 area, and then it's continuing to move higher. Big retracement there, moving higher. So my point here is, as we're going through this muscle stocks list, you might find a stock that hasn't gone from hold to buy, but it still may be a buy, but it still may be a pullback to a level that could be a new buy, or at least a new entry inside of that. And those are great buy opportunities for pullbacks inside of solid uptrends. Okay, sometimes there is a hold signal, but other times they're relatively new. If you have a stock that goes from 4 to 6 really quickly, the rank is going to jump pretty high, and it may show up inside of that muscle stocks group in that muscle stock scan relatively soon. MNMD is another good example. We got into that one. This was one where we did buy into that here the day after that. So we bought into that bar right here. Stop loss was, I believe we set the stop either at this low, or it might have been even lower than that. It was a pretty wide stop. Took off, it had some volatility, some retracement. We get another big confirmation bar. Okay, so now it's continuing that overall move. That's a classic momentum trade. Okay, it's right here. Now it's just, is it going to stop out down here, or is it going to keep moving higher? We want some strength in some of those kind of names as well, because we want, we want a little bang for our buck sometimes, and we're willing to take a little bit more risk, a little bit more volatility in exchange for some potential upside, like, those big ones, 2 and 3 and 400%, or even, 10, 12, 15% in a couple of days. Those are always fun as well. So muscle stock group, going through, scanning, looking back. Let's see if we can find anything. Like, here's an example right here. MESO, this thing has gone, gap, and now it's starting to pause right at that 236. So it's like there's a ton of momentum, there's a ton of volume for whatever reason. We don't know yet. We could always go in from here, as I mentioned, go in to the news and do a little bit more homework and figure out what is this stock, why is it moving? But a pullback inside of that 236 range may create a support level for some more upside as well. HRTG, talk. Some of these are buyouts. If you ever see a stock like this, like Taste, it's a buyout, which means another company has bought this company, but it's still trading, but it's trading with no price value because the new company said, we're going to buy this stock for whatever it was, 950. And so now the new company, there's no reason for it to trade at any other price. The new company, eventually this symbol, the new company will absorb this ticker symbol and this will go away. And then it will just trade under the new symbol. And sometimes that takes a few months to happen. So if you ever see that, that'll typically be the case on a stock like that. It'll be trading under a new symbol eventually. CLS, so some nice trades in there. SkyWest as well. So that's talking about momentum, talking about locations, talking about entry in ways that are in addition to your traditional scans. You might be able to find something that is still in an uptrend, but giving you a pullback, an opportunity to buy inside of a pullback to be watching for like this. Okay, so let's see. Let me go over a couple days. So right here, here's a good example. We're connected to this trend. This is our uptrend. Here is our momentum zone. I would expect that $65 range to hold for two reasons. One, look where it has been before. Okay, there has been resistance. There's been price activity inside of this zone before. And so a retest back to that support and the 236, I would expect it to hold up right here. So you got a confirmation bar right there. That may be an example of, okay, I'm going to buy into an uptrending stock at this area because it could continue to move higher, and that's what it's doing right here. Okay, so we'll pull back into that support zone inside the momentum zone ideally, and support at the momentum zone and support at a previous support area as well. So somewhere around here, those are good setups to be able to focus on. And it may be, you get some continuation in this case for a few days. Some of those trends are going to last longer than others. Let's see. Let me go back through. Let's just portfolio currently sitting right about the same. We've been whittling these down. Notice that these are relatively smooth slices of the pie. Only got one now, USAP, that is up to 3.2%, 27% gain. As those increasing gains, so notice here, we've had ALAR, ALPN, CLS, which are the biggest winners as of now, but they're not taking up too much of the portfolio. CLS, because we sold off a portion of the shares into the strength. Okay, so so now we still have remaining shares and they're still continuing to produce, but we've moved the gains back over into cash. And so now we've got a relatively equally balanced portfolio across the board in terms of position size. And that's primarily how I prefer to sell my winners, is into is a rebalancing. It's a rebalancing of shares. I'm taking a certain percentage of the shares that I own, and if that slice of that pie gets bigger than, bigger than I want, or bigger than a certain number, typically in a good, strong, solid bull market, those winners are up by 100%. And so that takes our portfolio allocation from 2.5 or 2% to, in this case, you can see that 3.22. They were up above that 2 to 2.5% allocation, which is that benchmark. And so if we want to take profits off of winners, then we can sell that 3.22% back to 2%. Okay, or you see that number, it says 27% gains, $867 are gains. We could sell just enough of that to put us back to 2,000 or 2,500, and then let it grow from there if it's going to continue to grow. And then we'll use a trailing stop loss on the rest. Okay. Now, with market conditions kind of topping, you can also, you can do whatever you want, honestly, as long as it's a system, as long as you're doing something with some rhyme or reason and your risk is defined in advance, then you can manage that however you want to. So, with maybe when market conditions are a little bit more volatile, you might say, hey, I'm going to take a new buy stock and I'm going to buy into, let's just say this one, for example. It was a good solid update, confirmation bar. Now, and say, okay, I'm going to buy into this trade, but I'm going to sell early and into strength, 2 or 3 or 4 days, okay, and just take some of those gains off the table. I don't like to do that very often, but if a bull market is coming to a close or starting to slow down, then and we're just wanting to maybe take the gains a little bit sooner, that's one of the ways to be able to do it as well. And don't sell the entire position. Sell part of the position into some strength. You're up 14%. What does that mean? Okay, well, maybe I sell 14% of my of the entire position. If I had 1,000 shares, maybe I sell 140 shares, okay, or 100 shares or 200 shares. I still got a bulk of it, but I'm selling some of those into some of the strength and moving that money back to cash. And then I'm doing it again tomorrow with another new stock. Okay, so we're as far as the management, we're setting up that initial stop loss, but as far as capitalizing on the gains or harvesting those gains, there's multiple ways to do that. You can do it quicker, you can do it longer. I prefer to do it longer because we just don't know which one of these stocks is really going to take off and give us a big move. And that's where we really make the bulk of the moves, is when we get 1 or 2 stocks that really take off and have a nice run for us. I am going to end on that note. Again, just to kind of reiterate market conditions, sitting at the upper end of this range, we're sitting at a bull market rank of 22.15, which is this line right here. This is as high as it has ever been. Anything above 22, it's only been there 3 or 4 times in the last 10 years. So you can also see that this line has gone straight up. That's unsustainable. This trend is not going to last like this forever. We just don't know if it's going to be a sideways move of consolidation right here, if it's going to be a retracement to maybe this magnitude of this. Maybe we get a pullback to support right here. That would kind of be my first take of any pullback, is it's going to pull back to the breakout level, and then we could get another real nice bounce off that breakout level. So still bullishness as a whole, but in the degree of the bullishness right here, because we are so extended, I don't want to be heavily invested in equities or with a large percentage. So in this case, we've got a larger percentage of cash, and then our holdings, we've got about 22 holdings, and that's about where we end up. And each position that I'm adding into is about 2% right now. Instead of the 2.5%, it's more like 2%. And I'm looking to take some of these gains off the table a little bit sooner than a full 100% gain on some of those. If we've got some gains and it looks like maybe the stock is floundering just a little bit. For example, CLS, we took a partial portion of the gains right here. Again, from down here, we had bought right here. It was starting to get a little bit, waffly, if that's an actual trading term. But we were starting to get into that overall uptrend. We'd had some nice gains, taking a little bit off the table, but we still have a pretty nice size holding for this move yesterday and today. And that's what we want to do in terms of the overall position, is think of each of these stocks as a part of the bigger perspective. What's that stock doing for my larger term portfolio goal of, obviously growth? We want growth, but we want to do it with a risk adjusted approach, meaning we're not just going to buy $5,000 of a stock and hope that that's the one stock that goes up 300%. That's not sustainable. What is sustainable is going about it each day the way that we're approaching these. We're going to get some big winners. We're going to get some average winners. We're going to get some duds. It's just how it works. But we want those losers. We want to get rid of them quickly. Here's an example of a couple that are starting to get close to a stop loss. Okay, we get a breakout. Our expectation is that it holds and then it goes higher, right? Well, that doesn't always happen. So what do we do when that doesn't always happen? We have to make sure that we have a stop loss in place. So at some point when this trend and it's starting to fail, it's also failing this support area and it's failing that 236. And our stop loss is right around $7, I think. So it might be a little bit lower than that, but it's getting pretty close to it, and it should, because it's just not working. It's not moving the direction that we want it that it normally does happen in a momentum trending move. Does that mean it couldn't bounce off of here and then move higher, or bounce off of here and then move higher? Yeah, it certainly could. But what's going to happen first? Is it going to touch 4 first and take 6 months to do it? I don't want to wait and see. I don't want to hold it and wait and see. I would rather get rid of it at a certain level, move on to the next trade. If this one does come back and creates another opportunity, then great. And if this stops out, then great. It didn't work. It's not a big deal. As long as our risk in the trade is not a big deal. Any risk that we're going into is always, that's real money, and that hurts, and that volatility, that's painful. But if we're using a systematic approach, and we know that we're cutting our losses, letting our winners work as long as they can, taking some of the gains off the winners, holding on to some of the shares to allow that to continue to move higher, then that creates a more balanced, sustainable approach, and we can do that. We can do that for a long time, and we can continue to trade and continue to stay in the game. A lot of traders get blown out of accounts because they want too much too soon. They take too big of risks. They don't understand the risks that they're taking when a bad trade does happen. We want to make sure that we're utilizing a sustainable, systematic process so that we can continue to find great names and find great stocks, whether the market conditions are up or down. They're going to pivot. They're going to go to gold. They're going to go to base material. They're going to go to oil, and then maybe they come back to chips and AI, and come back to biotech, and come back to, biotech is still working. Those things are still working there. There's always going to be something in this upper range of upper 90s, and that's what we want to focus on. I'll end on that note. Thanks everyone for your time and effort, and we'll see you next time. Have a fantastic weekend. Bye now.